And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because it's like Caterpillar. When they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Welcome to my podcast for Monday. So the market's a little grumpy. It's all in the red. Why is it grumpy? Well, first of all, it doesn't trust the stock market. How do we know that? Gold is up. Anytime gold is up, it's saying, hey, we don't trust the stock market. And who's they? The institutions. Now, it's up about $14 today. And that's about a third of a percent. It's trading around 4,451. Now, gold, it sends a signal. That's what people don't realize to traders that yields are too high for a tech-dependent market. I mean, we are, after all, a tech-dependent market. There's only 12 tech stocks holding up 700 other stocks. And so I would say that's tech-dependent. And high yields is not good. That's real bad. Now, the other thing that nobody wants to talk about, especially Wall Street, is the breadth. The breadth is the backbone to the stock market. So in other words, this stock market's a fake. It doesn't have the breadth. It's not sustainable. But boy, they're not going to tell you that, the jibber jabbers on TV or Wall Street. When you have only 12 stocks contributing to breadth, that's bad, very bad. Because breadth is the heart of every rally. It's the oxygen for a rally. That's where the oxygen comes from, is breadth. So, if what the market really wants, and what institutions really want, and one of the reasons institutions have gone to the sidelines and pulled a lot of their money out, they want to go back to the gold standard bull market. The gold standard bull market that we had between 1995 and 2021, instead of playing all these games, they're tired of all this BS. That's what's going on. The yields are too volatile. Nobody's talking about the breadth. You got 12 stocks. Are you kidding? Let's go back to what they used to call the golden age of rallies. On average, when you had a rally, I'm talking between 1995 and 2021. I'll go year after year and show you what I'm talking about. All those, about 7 rallies in there, 7 big rallies. On average, we had 400 stocks pushing oxygen into the rally. 400. Now, the Trump people are saying that his rally is the greatest in history with a 20% return. What are you, nuts? If you take the 6 stocks, or the 6 years during that golden era, it doesn't even make it in the middle. I mean, are you kidding me? So the greatest market in the history is fake. 12 stocks contributing oxygen? When 400 stocks were contributing oxygen during the golden years? Now, Trump rally hit 20% gain, and that's quite an achievement. I wouldn't take that away from him. 20% is a joke, however, because you have a fake rally. So if you go ahead and you measure, and we'll do it together, take, for example, that 1995, do you know what the return was in 1995? 20% was nothing. It was 34%. 1997, 31%. 1998, 27%. And then, of course, in 2013, 29%. In 2021, 27%. So you're talking 34%, 27, 29, 28, 27. You're talking about 10%. I'm talking about 20% against those numbers? What are you, nuts? That's insane. And they're saying this is the greatest rally in history? Well, someone needs to teach the White House a history lesson, or whoever is advising Trump. I mean, I just don't see Trump putting out this fake crap like this. There's got to be somebody on this team. I hope I'm wrong, but I mean, you can't come out and say we have the greatest rally in history when you go and look at the books, 95, 97, 98, 13, 2019, 2021. They're crushing the 20%, crushing the 20%. And the worst thing, what they don't want to talk about, of course, is the fact that the yields and the contributions. I mean, when you have breath is like this, like the foundation in your house. You're building a house, you're building a garage, you have a foundation. That's oxygen. That holds everything up. It's the same thing with stock market. But Wall Street doesn't want you to understand what breath is. That's why when you go sign up at all the different brokerage houses, they give you a bottle of Scope. That's what they want you to think what breath is. Here, a bottle of Scope, you sign up instead of a toaster. What are you, nuts? Trump, greatest market ever, has the distinction of being fake. It doesn't match 1995, 97, 98, 13, 19, 21. Those are all bigger returns. But the important thing is they got every one of those rallies was 300 to 400 stocks contributing to the breath, pushing oxygen in. We have 12. And gold going out today, and I told my members a week ago or 2 weeks ago, we bought gold, we bought GDX. They said, just get in GDX, go a little, don't do a lot, because gold is going to come back up, and sure enough, it is. So what's happening is the institutions who are sitting on the sidelines who drive the market, who has 10 to 13 trillion dollars, they shove in the market, they took most of all that money out. Okay, they're sitting on the sidelines. They're not going to come back in because of the yields. They're too wacky. And they're not coming in because the breath is insane. I mean, there's no oxygen. So when only 12 stocks breathe, the whole market suffocates. That's what's going on. Our market is suffocating, and gold's been up to date to tell us that. But you're not going to find the jibber jabbers on TV coming out and telling you that. No. Because who do they work for? You? No. They work for Wall Street. Who does Wall Street work for? Everybody works for the biggest institutions. BlackRock, Vanguard, and who they all work for? Teachers unions, fire workers unions, all the different sovereign wealth funds, 401k, savings, all that stuff. So you got 6 major institutions that control $13 trillion for stock, just stocks, not talking about bonds. And all that money they have comes from those entities which they protect and guard. That's why they tell you don't short. That's why they tell you cost average down when there's no QE. You never cost average down unless there's QE. But anyways, getting back to the point, we don't have strong breath. And as I said, 80% of the 1995-2020 S&P 500 stocks, every sector participated with good breath. That's why it was the golden era. But they stopped with all this crap now. They now can create an illusion when you got 12 stocks with hardly any breath. They can create an illusion. Look at these stocks. Look how great they are. And they've done a great job. Now, so the other thing that's going on, all the other claims that not only do we have this all-time, all these highs, right? We've had 74 all-time highs. No, we haven't. We've only had 64. So, again, to say this is the greatest market ever, it makes no sense. I mean, it's just, it's silly. It's crazy. So again, the bottom line is right now is that all the different, if you take, for example, I'm trying to find here, I had a note I want to talk about, that that if we had this greatest market in history, I just found my notes, if we had the greatest market in history, do you know that gold would be at 1,900 or 2,000? That's right. Now, if we had the greatest rally in history, that's where gold would be. The 10-year Treasury, the yields would be at 3.25. 3.25, not 4 point, what are we today, the 10-year? 10-year is today, if I look at it quickly, the 10-year is 4.18. So my point is, if this was the greatest rally in history, we'd have 400 stocks contributing breadth. Gold would be at $2,000 an ounce. The 10-year would be selling, the interest yields would be at 3.25 to 3.5. The 2-year, the most important, especially for tech, it'd be at 2.75 or over 4. So there's nothing that you can check on your list that says this is the greatest rally in history. It's all BS. So again, this is not the greatest economy. It's not the greatest market. I mean, they're selling that the Fed is done hiking. The consumer's slowing, but boy, he's still strong. He's not collapsing. Oh, don't worry about oil. Everything's going to be okay. It's not going to spike. Oh, and geopolitical tensions, we got those contained, man. We got all of it in control. Oh, deficits? Oh, don't worry about them. Now, if we had the greatest rally in history, our deficits would be shrinking. They're blowing up. We're running a $2 trillion deficit. A strong economy. Deficit to GDP trades around 2 to 3%. Today, we're sitting at 7%. What are you, nuts? So, oh, and 401ks. Another note I took down before I came on here. We're being told that the average 401k gained $30,000 this year. Go check your 401k. It's not true. Who the hell gave Trump that number should be fired? 9,000 is what we're up. 9,454 401k. Not 30,000. The record number of Americans are working, they claim. No, they're not. We don't have a record amount of Americans working. Oh my God, that is such a lie. Oh, and manufacturing is all coming back from Europe, all being invested in the United States. It's not true at all. Hardly anybody's coming back. Nobody's going to get out of Taiwan or Nam or China, where they can pay somebody 2 cents an hour to make jeans. You're going to bring them over here where they want health care, they want a boat, they want a car, they want a house, they only want to work. Now all the communists coming in here, they only want to work 10 hours a week. They're not coming back. So the bottom line is this. To be a good trader today, you got to stop listening to the BS. You got to follow the money. And the most important way to follow the money is to follow what we call stochastics. And the stochastics on your chart will, reflect if the attitude of your candlesticks. If money's going to go into your candlesticks or money is coming out. Whether it's going in or out, it will reflect in a stochastic. That alone could cut your losses down by 90%. So that's it. So again, I hope you enjoyed this. Meet me again tomorrow. And if you're not a member, check us out, philsgang.com. See you on the charts.